What's up, everybody? Just want to take a quick second and let people know that I am self-supported. I now put all of my episodes on Substack for paid subscribers. I put them up early, and then 24 hours later, I release them to the public on all my platforms. I also have Venmo, PayPal, Cash App, Buy Me a Coffee, Zelle, a PO Box, and I don't think Locals, Patreon. And all of the links are in the show notes of every single episode I put out. So look forward to continuing to provide great conversations. And thank you all for your continued support. Karl, good to see you. It hasn't been that long, but I keep saying this, and I don't mean to bore my audience by repeating myself, but there's a lot going on, but yet nothing's going on, and I don't know. I don't know if that's how you feel with everything.
Well, yes and no. I mean, I think this is a fascinating time. Um, the political element of things is obviously very challenging, if you will, to try to predict. The market stuff that's going on as a result of it is amusing to me, mostly because it feels like a play that I sat through, back about 15 years ago. And it's the opening act, and then we know Lincoln's going to get shot, right, the last time. So, um, it's like, okay, where's John Wilkes Booth? Has he used his ticket to get into the theater yet? And and I think the answer to that is yeah, he's in the theater. Um, and yet the people whistling past the graveyard and at the same time screaming for someone to do something to prevent what is inevitable is really something else, including just in the last 24 hours, Trump. He wants to see Jerome Powell deposed because he didn't drop rates and says he's not going to. Okay, we'll see. I mean, Powell gave a pretty, I think, cogent analysis of why it's extremely unlikely that there's going to be any kind of policy change over the next, the rest of this year anyway. And Trump didn't like that one little bit. So, but that's nothing new. He's not the first president that doesn't like what the Federal Reserve is doing, and he won't be the last.
Powell he doesn't leave until next May, so there's another year of this.
Well, it's not yeah, and then the other problem is whoever gets appointed has to be approved. Okay. So if if Trump thinks he can just turn around and ram whoever he wants into there, well, that person has to get through the Senate. So don't think so. That's not how it works. And uh, I mean, could he theoretically try to fire him? Well, I suppose he could try. I don't think that would be a good idea. Uh, I think he'd fail if it would be challenged, and I think he'd fail. But even if the intent, the attempt to do it, I think would probably crash the markets. So it would be extraordinarily unwise for him to do something like that.
Yeah, I saw a tweet last night somebody sent to me. And are you on X at all anymore, or you don't even look at it?
Um, well, it's funny because every now and then I do open it, and the algorithm apparently has forgotten what to do with me.
Are you posting anything, or still no?
No, no, there's nothing on my timeline at all. But I still see things, so you'd think it would track, what you have viewed, but there's a disturbance in the force, and you and I, Michael, talked about this that the entire point of these social media sites is not to bring you information or to serve as a news source. This is what they all try to tell you they're doing. That's not what they're doing. The entire point is to push one of two buttons, either the dopamine button, which is your pleasure center, right? And the other one is the adrenaline button. It's your rage center. And in order to do that, you have to say something. You have to interact with things. You can't just read stuff. You can't just look at things because that doesn't give the algorithm any information. You have to have a response. Well, since I killed all my content on there, I haven't liked anything. I haven't made a comment. I haven't posted any material. And so it's interesting what happens to your timeline when you do that. So it's essentially I guess the system considers me an amorphous blob and treats me as such.
This episode is brought to you by Vaulted. Launched by McIlvaney Financial Group, with Vaulted, I literally just tap a button and I own physical gold stored in a professional vault. Vaulted is offering all of my listeners $50 of free gold when you click on my sign-up link. They have a tool called Vault Plan that allows you to passively add your gold position every month. Just activate it for 6 months and you will get $50 of free gold in your account. Click on the promo link in the show notes or go to vaulted.blbvux.net/coffeeandamike. So you're not going to use it?
I don't plan on changing anything until the fundamental reality of what social media is, whether it be there or on any of the other sites, changes. And I don't see that happening anytime soon because that's how they make their money. So why would they change things because I don't like them?
Well, somebody, his name is Kevin Malone, and somebody sent me his handle last night, and his description is redefining what a fiduciary financial advisor should be. Now, his post I thought was interesting that it got a lot of traffic. I mean, it got a lot of traffic, but breaking news, this was yesterday at 1:39 p.m. Federal Reserve reverse repo hits its lowest level in 1,454 days.
Okay.
So the question that I have when I look at this is, because people are writing, where did all the liquidity go? And you talked about this, you know, early in some of our other conversations, if they're trying to crash or collapse this system on purpose.
Well, who?
That's what I'm trying to figure out, Karl. I was hoping you'd tell me that.
Well, here's the thing. That's not the Fed's job. Okay. So I understand that there's a lot of people who think that, there's this cabal that, basically wants to get Trump by causing the market to crash. Sorry, I don't buy into that. That sounds like a bunch of tinfoil, take a couple wraps off your head. There's a few too many on there. It's probably constricting the blood flow to your brain. Yeah. Or you could go listen to Alex Jones. I'm sure he could tell you all about it. But the basic problem with the repo facility in the first place is that it should have never existed. Okay, that entire facility was essentially an attempt to prop up a bunch of very stupid things that were done by people in an unregulated format. This is the same sort of thing that was done in the lead up to the 2008 crash, and I flagged it in early 2007. The thing that set me off, I mean, I don't know if you and your listeners remember, but in the first couple of months of 2007, there was a huge market dislocation. It was only for a few days, but it was enormous, and it was centered over in Asia, which didn't make a lot of sense because there wasn't anything going on. Nobody had nuked anyone or, anything like that. That would be an obvious reason for it, right? I mean, if the Chinese were to sink a ship or, Japan did something weird, there's 1,000 reasons for something like that to happen, but there wasn't anything I could find in any of the wires that explained it. And so from my point of view, it didn't make any sense. I mean, here we are with this monstrous dislocation that has clearly occurred in the markets, but I don't know why it occurred. And so I start digging around, and what I find is this situation that's going on with credit default swaps that are being traded off exchanges. And the reason hedge funds who don't hedge, it's actually it's not a correct name for what they do anymore. used to be that if you went into a hedge fund, you accepted a lower return than the market on purpose because you were somewhat protected from the possibility of the market crashing. And so there was some protection, but protection, like any other kind of insurance, costs money. So you accepted a lower rate of return on purpose in return for, just like you buy insurance on your house, even though you don't think it's going to catch on fire. And every year it doesn't catch on fire, you throw that money away. And the one year it does catch on fire, they pay you. Right? So, I mean, that's, same thing with your car, right? So, but what these guys have done is they've moved into a model where their idea is to get more return than the market will provide by just sitting in an index or by trying to pick stocks. And so, and part of that is because historically picking stocks doesn't work. So, there's a few people that are very good at it for a period of time. They're never good at it over, 20, 30-year periods. They're good at it for 5 or 10. And then, everybody has a hot streak. Same thing with, roulette wheel or, dice or whatever. So what they've tried to do is find ways to goose this above the normal way to do it. And on a stock exchange or futures or options, the exchange or the clearing firm that is behind the exchange is actually the counterparty in the trade. So if I buy a put, for example, I don't know who sold a put. Someone did. They sold it to me, but I don't know who they are. I have no clue. And therefore, the obligation to make good on that, if I win and the other guy loses, is on the clearinghouse that actually clears those trades. So as a result, that clearinghouse and the exchange are going to police the margins. That is the ability for the people that are transacting to actually make good on their transactions. Because if not, I mean, they're getting paid pennies for these transactions. Okay. They cannot take credit risk of any kind, and they don't. I mean, you remember the movie Trading Places, right? At the end of at the very end, the guys come up and say, "Margin call, gentlemen." Well, that's really what happens. Okay. And if you don't have the money, you get liquidated. And these days, in the days of computers, it happens in the middle of the day. You get a phone call from the clearing firm, and you have about an hour. And if you don't meet that margin call, you don't wire the money in, they take you out. And then if you still have a negative balance, then they come and they seize your house. I mean, literally, it's kind of like what you saw at the end of that movie, right? They seize all your assets. They take everything. And that's because if they don't, they will go bankrupt instantly. And it doesn't matter how big you are or who you are. There are no exceptions. They can't make exceptions. Well, hedge funds don't like these limits. So, I mean, if you have a maintenance margin, if you invade it, you get liquidated and all your money's gone. And that's the way it works. And it doesn't matter if the market reverses 5 minutes later, you're still broke. So these guys took these credit default swaps and started trading them privately, completely off exchange. And they were using leverage ratios that were obscene, in some cases 100 to 1, which means a 1% move in the wrong direction and you're bankrupt. All right, now if you think about that, 1%, that's a tiny move. But if that happens, you're bust. Okay? And the whole reason they did this was to get away from the margin supervision. Well, I found this, and I actually wrote an open letter to the president, to the members of Congress. I posted it on the blog. This was in early 2007. I still have it. And pointed out that this was what they were doing. And if this, and that these transactions all had to be forced onto an exchange right now, that this was going to bankrupt people because they didn't have the money to cover the margins. They were underwater. And if we didn't do it, it was going to blow up the system and there was going to be a huge crash. Well, it took a year and a half, but it happened. And now we've got the same thing going on, but it's in this basis trade. And this started to go bad in 2019. And that's where all this repo crap came from, with the Fed. And it's the same deal. These guys are out there transacting in off-exchange things, swaps in this case, using treasuries as collateral and gearing at ridiculous levels of leverage. I've seen reports anywhere from 20 to 1 to 100 to 1. Again, 100 to 1. Okay. And a 20 to 1 leverage, a 5% move wipes you out. You're bankrupt. All right. That is crazy. And you know what? If you have the cash behind that to be able to put those trades, okay, fine. You don't have any problem with that. But when you are underwater to 5%, you're wiped out. That's the end of it. It's liquidated. You're done. And you can't screw the guy on the other side, because as soon as you do that, the risk becomes systemic. Now you impose a loss on the guy who was a winner. He made the right decision and he loses money, even though he was right. Now that is exactly how you end up with the kind of cascade we had in '08. And it's happening again. And this is the problem, is that when you create liquidity like this and you build these kinds of instabilities into the system, and in the case of foreign exchange and trade, we've been doing it now for 20, 30 years on a pretty much continuous basis. And then you add entities that are supposed to be subject to regulation that try to find ways to cheat, to get around the rules, and eventually, just because luck always runs out, that 5% move comes, or that 3% move comes, or whatever it is, and you either put a stop to it right then and there as soon as you detect it. And really, it should have never been allowed to occur in the first place. But nobody wants to stop it. And as a result, we're staring down the same sort of problem that we had back in 2008. And I don't know how far out it is at this point, but the internal damage from the moves that we've seen in the market in the last 2-3 weeks, I pretty much guarantee you that sometime within the next year to year and a half, it's going to blow up. And I just don't know where it's going to come from, because just like the last time, I don't know where the fracture was. Okay, it turned out that it was in Lehman Brothers, along with Citibank. And Citibank had warning about a month before it all went to hell. They had warning in August. Okay, Lehman blew up in September. They had warning in August because Lehman tried to do a repo transaction with them, posted collateral to Citi. Citi said, that stuff sucks. What else you got? And Lehman's answer was nothing. Now, at that instant in time, Citibank knew Lehman was bankrupt. And that was weeks before the public knew and before the crash happened. But so they had material inside information that Lehman was broke. And this was officially reported in the Lucas report that came out after all of the dust settled on this. But nothing was ever done about any of this. Nobody went to jail. People presumably traded on this inside information. Gee, I wonder who knew that they should be shorting the hell out of Lehman Brothers. Okay. I mean, gee, we know these guys are bust. Hello. All right. These kinds of situations are not supposed to be able to happen. And in a regulated exchange world, they don't. But when you have off-balance sheet stuff like this, they do. And we're doing it again. So here we are. And the tariffs are kind of the trigger for it.
So do you anticipate this to be bigger, broader than 2008?
Oh yeah. No, this is way worse. It is cross-border. It is, the credit default swap thing was for the most part a U.S.-centric transaction for the most part. Not all of it. Some of it wasn't. I mean, then you had the thing with the pigs, Greece and Italy and all that. But for the most part, it was U.S.-centric. But there was a lot of fraud involved in that too. All right? And one of the reasons that I started writing the blog was that in the first quarterly reports from 2007 started to come out, Washington Mutual was paying dividends out of money they didn't actually have. Now, that should have drawn I mean, they have to file a quarterly report. Okay, I mean, this is public information. They have to file it with the SEC. The day that went into the SEC, the bank examiner should have been in there, and that bank should have been shut down that very day. But it obviously didn't happen. And I said, these guys are going to go bankrupt. And a little more than a year later, they did. And it was inevitable that was going to be the outcome.
What if they would have let everything fail?
Well, that's what they needed to do.
Because had they done that, though, where do you think we'd be at today?
Well, the market would be at about a quarter of what it is now, but we'd have a much more stable economy. House prices would be half of what they are today. Most of the inflation that happened during the COVID years, I mean, a lot of that still would have occurred because the Biden and Trump administrations both would have probably handed out checks like they did during that period of time, right? So I mean, assuming that those things still occurred, but an awful lot of the embedded deficit building and therefore the structural problems that we have now with the debt rollover at the federal level and the impediments to policy, those wouldn't have occurred because it was 15 years of that stupidity that has gone on now, and that wouldn't have taken place. My suspicion is that J.P. Morgan, out of the large investment banks, J.P. Morgan was probably the only one that would survive that at all. Goldman might have. J.P. Morgan almost certainly would have. But, I mean, at what price? $3 a share? I don't know. But all the others, instead of being rolled up and whatever, they just would have ended up being liquidated.
I saw an article this morning. I was trying to look for it real quick, talking about private equity and
Yeah.
the waiting bomb for private equity that's coming. Which I got to tell you, Carl, I don't know that I'd be very upset to see that, the way private equity's been.
Well, I mean, when you look at what they've done, okay, this is the problem with throwing credit out willy-nilly and cheap money, all right, is that it enables all sorts of things that are uneconomic, that if you have to do them with your own cash, you won't. All right. But when it's not your own cash, all of a sudden all these things look kind of reasonable. So, I mean, that's none of the damage this does to people. I mean, just as an example, private equity has been running around buying up nursing homes and buying up trailer parks.
They're buying bakeries. I mean, there's like no limit to what they could buy.
But they'll come into an area and they will effectively form a monopoly in, for example, trailer parks. Okay, and then they raise the rent on all the lots by 50%. And you can't take up your mobile home and move it somewhere else in town because they own all of them. So, I mean, what do you do in that situation? They do the same thing with the nursing homes, and it's these kinds of concentrations of power are supposed to be illegal under 15 United States Code, Chapter 1, which has been around for more than 100 years. This kind of an action is a felony. It's not a civil violation. It's a 10-year pound you in the butt criminal felony. But nobody ever brings charges.
Is that so? The idea of private equity, is that going away in your opinion, or are they just going to get crushed?
I don't know. Well, they're going to squeal and try to get bailed out again at everyone else's expense. I don't know how that's going to work out. I mean, at some point, you would hope that somebody would have the brains to say, up yours. But, I mean, Trump loves a high stock market. Then again, so does every president. So did Biden, right? I mean, how often did you hear the Biden administration crowing about the fact that the economy is doing good because the market was up? So, I mean, it's not just Republicans that do this.
So you think potentially the tariffs are what could be the igniter to bring this thing down?
Well, so tariffs, all right. So let's dispel a few things. First off, tariffs are a tax. That's one of the things that everyone on the left and all the other people that are violently opposed to them have said. Tariffs are a tax. You're raising taxes on Americans. Well, tariffs are a tax. It's absolutely true. That's what they are. But they're not inflationary at all. In fact, they're exactly neutral monetarily, just like any tax is neutral monetarily. If your income tax level goes up and you have to pay a higher amount of money to the government income tax, that is an exactly neutral event from an inflation point of view. And the reason is the money comes out of your pocket, but it reduces the deficit by exactly the same amount. So, same thing's true for a tariff. Yes, someone pays the tariff. However, and that makes prices go up. However, it's not inflationary because the deficit, which is the driver of inflation, all inflation is fundamentally about deficit spending, that tariff money goes exactly against the deficit, dollar for dollar. Now, it is true that the price increase is concentrated in one place. The deficit reduction is spread across the entire country and across everyone in America. So it is absolutely true that it is a balancing force because it applies force in one place, but spreads the benefit over everyone. Well, wait a minute. Isn't that what all these socialists try to tell us is so good about socialism and socialized medicine and socialize this and socialize that? And, that everyone should get the equal benefits, right? Everyone should get benefits just because they're citizens. Well, that's exactly what a tariff does. It takes the benefit and spreads it across the entire base of the population because it reduces the operating deficit of the federal government. What it is an attempt to do is stop the imbalances, what drives the offshoring, what drives the production of things out of the country in the first place. Because if I produce something in the United States, I don't pay a tariff. And the Constitution says that states cannot levy tariffs between themselves. Okay, so if I make something here in Tennessee, Alabama cannot tariff my product. That's unconstitutional. They cannot do that. So as a result, if I make the product anywhere in the United States, there is no tariff. So why does a manufacturer, and it's two questions that people that are listening to this need to ask themselves because the answers will be quite apparent to themselves. Nothing is free. Nobody ever works for free. Ships require fuel. Planes require fuel. Trains require fuel. All of them require maintenance. Every mile that you move a thing costs you money in each and every instance. There are no exceptions to this because you have to put in energy and you have to put in manpower. So the most economic place in terms of the lowest cost to make something is 5 feet out the door of the person who's going to buy it. Now that obviously is impractical. Okay, you're not going to have a factory for every single thing you consume sitting right outside your front door. But the further away something is, the more it costs, just in transportation expense. So why is it that all this production has been offshored? And the answer is because you have slavery, which we were supposed to have banned in the 1860s. We had a little war over this. And you actually had a congressional member state, we need these illegal immigrants in the United States because we're not picking your effing cotton. This is a black woman. Now think about that for a minute. Here's the reality. She loves slaves. She thinks everybody should own one or two of them and they should be Mexican. All right. Oops. So what is the situation with Apple? Why does Apple have their entire production system overseas? We're their largest market. They sell more iPhones here than anywhere else in terms of single country sales. Why would they not make them here? Well, the reason is because you can't pay people $3 a day to screw them together, and you also can't pay people $3 a day to make the box. And you can't force them to work 7 days by 12 hours a day either, because that violates wage and hour laws unless you want to pay overtime, which of course you don't want to do. Okay. So, and then on top of that, all that ink and all the other stuff that goes into the paper, all the stuff that goes into the screens and the batteries, and also all that stuff is extremely environmentally dangerous. Handling it properly is expensive, so that you don't poison the land, the water, and the air. And China doesn't care. Neither does Vietnam. And the last time I checked, we think coal is so terrible, right? We've essentially banned it as an electricity source in the United States. The move to green energy in the United States has doubled your electricity cost. That's a fact. And between every unit of production is a unit of energy. I don't care what you want to make, you have to use energy in order to make it. Okay, that's fine. We have decided in the United States that it is unacceptable to use the cheapest, most efficient way to generate that electricity, and therefore everyone has to pay more money. China is building 1,000 coal-fired power plants. Last time I checked, there is not a wall around the outside perimeter of the Chinese country that prohibits the pollution that they spew into the air from their 1,000 coal-fired power plants from coming right over here and poisoning us. There's only one atmosphere around this earth, and if it is unacceptable for us to use this as a form of energy, then we must not allow any other country to do it and then export the products into the United States. Because the only reason Apple has a 2 trillion plus market cap is because of this arbitrage, both in human labor and in the environment. That's the only reason. By the way, they're not alone. I'm just picking on them because they're the biggest. All right, Lululemon sells $100 yoga pants that cost $6 to make in a Chinese factory. That's full of people working 7 days a week, 12-hour days in a sweatshop with no fire safety. Once in a while, one of those places catches on fire. Oh, well, 100 seamstresses go up in smoke. They don't care over there. Over here, you can't pull that kind of crap.
Yeah, it's you talk about tariffs and China, and it's like, okay, who allowed all this to happen? Who allowed these American corporations to outsource all this work?
Well, we started this with most favored nation status with China. Okay, that's when it began.
When was that? When did that begin?
That's this. Well, the push to do it started with Nixon, but Clinton was the one that was arguably the most responsible. Although trying to point at one party or the other is a fool's errand, because both, I mean, when you get down to it, either one of the political parties could have put a stop to this, and neither one will, because Apple doesn't sell for, doesn't have a $2 trillion market cap if this is stopped. By the way, Nike doesn't, sell any, $200 Air Jordans that cost $4 to make over there either. There's a common trope that, what you hear is like, well, we can't make Levi's in the United States or whatever. And my response to that is, before there were slaves picking cotton in the South in America, people had pants. Okay, you did have pants. What you didn't have was the ability to have these huge plantations controlled by one rich family, because the size of your farm was limited to the number of kids that your wife and you could poop out and raise to take care of the farm. Okay, as soon as you were allowed to own other people, all of a sudden you ended up with these huge spreads. Now, which is the better situation from the standpoint of everybody in the economy, though? All right, and oh, by the way, remember that Foxconn, not all that long ago, which was Apple's primary contract manufacturer over in China, had to put nets around their buildings because their working conditions were so wonderful that people were committing suicide by jumping off the roof.
I don't remember that, but
That's fact. Google it. That really happened. So, and that wasn't enough for people to say enough of this crap in the United States. Because, Chinese lives splatter. They don't matter, they splatter. So, yesterday, well, I guess it'll be a couple days when people see this, I put an article up on my site and I said, I've had about enough of this. And I've raised hell about it continually for a long time. I'm going to target the biggest, baddest guys doing it, and I'm just going to go by market cap. Apple. Okay? Biggest by market cap. Fine. You come onto my site with an Apple device, which is very easy to tell because every device identifies its manufacturer when it sends its browser identification string to the other end. You're going to get a pink screen and an explanation. You can still read the site and still use it, but an explanation that says that you support slavery. And the abolitionist 2025 position, of which I am an abolitionist in 2025, says that's bullshit. I'm not going to lock you out, but I'm going to make you think about the fact that the money you spent went to do this. And I'm going to put it in your face, and it's going to be there every single time you sign in. And I did. And the outrage that generated was rather interesting. And it's not coming down. In
What's that?
fact, I want to see a lot of other people do it, but we'll see if anybody else does. Now here's the criticism that people have leveled at me. Well, your computer was made in China. But yeah, it was. I can't buy one made in the United States because companies like Apple have set that standard to the point that I literally can't choose a machine that isn't full of parts that were made in China, regardless of where it's screwed together. Okay, now tell me how that's not a collusive business practice. And you say, well, it's just the way it is with labor and stuff. Yeah, okay, I get this. Okay, the cheapest labor is slave labor. When are we as a nation going to say that crap's going to stop? We're not going to put up with it anymore.
Yeah, I can't see people like the masses doing something like that. I mean,
You know what? Most people don't think about it. They pull their fruit out of their pocket. They look at their Facebook or their X or, Instagram or whatever. They think nothing of how that device ended up in their pocket and how much forced labor was involved, how much environmental destruction was involved. They don't think about that. If you shove it in people's face and you make them face it every time, I bet it changes. I mean, think about what happened to Anheuser-Busch. Okay? And what did they do? They just aligned with the social cause that an awful lot of people didn't like.
what do you think? This is now, I think, the third or fourth time we've spoken since Trump took office. What do you think about what's occurring there now with this administration? And we're watching the markets go seesawing, back and forth, back and forth, back and forth. Last time I looked this morning, it was down 400 points or something.
Well, the Dow is down because United Health had a really nasty earnings report last night. So that's the reason the Dow's down. The S&P and the NASDAQ are both up a little bit. But the Dow is down right now as we're recording this, 400 handles. And that's entirely because United Health, which by the way, is one of the major Medicare Advantage players, has basically said, hey, we're getting it in the butt on costs. Therefore, and they got pounded bad. Gee, go figure. You do a bunch of unhealthy things and you just, we'll pay whatever people, you build cartels, eventually that turns around and bites you. And it is. Surprise. It can't happen to a nicer bunch of people. But the tariff thing, biggest issue I have right now with the Trump administration is that he's trying to finesse through this with little steps. He announces something, then he comes back and he says, hey, go the other direction. Back and forth, rather than just saying, oh, by the way, I'm ripping the Band-Aid off. I'm essentially embargoing trade out of these countries. I'm setting the tariffs at a high enough level to cover the environmental damage and the human rights abuses, and I'm not taking them down. And if Z doesn't like it, he can shove it up his ass. And so can everybody else. And by the way, if you as another nation get involved in transshipping, where you're taking products from China, you're claiming that they're coming from your country, and you ship them in the United States, you're going to get hit with the same thing across the board, not just for the stuff you transship, but for all your products. So if you get involved in attempting to defraud the United States, you're going to pay for it. We're going to ruin you if you do this. And I mean, what would that do to the markets? Well, there goes the multiples. Okay, is that a bad thing? No, it's a good thing because, it's incredibly disruptive in the short term. Okay, horribly disruptive. Don't get me wrong. The market would crash. However, it would cause people to bring their production back here. Think about this. NVIDIA, it was a company I don't particularly care for because they've done everything they can to circumvent all sorts of export restrictions, getting chips into China and things like this. I think, my opinion, a number of the people in their executive offices should go to prison. But they are actually in the process of opening a fab here with TSMC in the United States. So don't tell me people can't. Yes, they can. And do you have a right to the kind of multiples and the kind of market caps that we currently have today? No, because they're all coming about as a result of human rights abuses and environmental destruction. That's why they exist. And besides the fact that it's wrong from a standpoint of abuse of land, earth, water, and humans over there, which inevitably gets us, there's also the fact that it screws everybody that is of median capacity or below in the American economy, doesn't have a job. Okay, I mean, there are plenty of people that live in this country that do not have the intellectual chops to be high-level coders, rocket scientists, and mechanical engineers. But they do have the chops to dig ditches and screw together iPhones and sew jeans.
Yeah, how we ever let it get to this point in this country. And that's where, I was talking to somebody about this, like, oh, the manufacturing will come back here. And it's like, well, yeah, but it's going to take years.
Well, yeah, it's going to take years, but you have to have some certainty that it's going to continue, because otherwise it's not going to happen. Okay, and this is one of the big problems that you have in general, is that you can't, we're subject to political realities that we live in. Okay, we have a 4-year presidential cycle, we have a 2-year congressional cycle. And this is why Trump, if he's going to actually get anything done, he has to do it all now, right now.
Do you think he's working towards that, Karl, or is it too much finesse?
Like I said, I think he's trying to finesse it, and he's going to, and if he doesn't cut it out, like right now, he's going to fail. Because what's been set in motion, that I don't know what it's blown up, but I know it has, because there is plenty of evidence. This has happened many times before in our economy and in our markets. Everybody, we went through all of 2007 and the first half of 2008 with Bernanke and everybody else. Subprime is contained. The economy is strong. The labor market is fine. Nothing is, it's just a couple of hedge funds that did stupid stuff and they blew up. It's not a big deal. Nobody's, don't worry about it. Go about your daily lives. Oh, how'd that work out, guys? Okay. The problem is you don't know where the destruction has been sown. You don't know who lit the fuse on the stick of dynamite and stuck it in somebody's gas tank, but it's there and it happened. And you'll never find it before it goes off, but it's going to go off. And the idea that somehow we're going to change the laws of physics and the laws of thermodynamics so we can ignore this in the economic world, baloney. You cannot ignore those things. Those are facts. I don't care what area of economics or operational anything. The laws of thermodynamics are not suggestions. They apply to absolutely everything, anywhere in the universe, including economics. It was something that I figured out quite some time ago. And I say this to people and they look at me like I got 6 heads. I'm from Mars. But it's true. And I've never found an exception. And by the way, neither has anybody else. That's why they're called laws. Unlike the laws that we have in our country that people break all the time, like Lydia James, that goes and gets a mortgage, says that she lives, that her primary residence is in Virginia. She's a New York employee, state employee, which means she has to live in New York. So she facially commits mortgage fraud, and then she prosecutes Trump for what? Lying on a financial statement. Same thing, right? Excuse me. All right. People do that kind of thing in business all the time. People do that kind of thing in the government all the time. But if you jump off a building, I assure you, the acceleration of gravity is 32 feet per second squared. And I don't care who you are. And I don't care if you're Trump. I don't care if you're Pam Bondi. I don't care if you're Letitia. It doesn't make any difference. You're going to hit the ground at the same speed. All right. You cannot do anything about that. And people think that there is some way to avoid these consequences. There's not. And the question simply becomes, when would you like them? And the answer with a 2-year electoral cycle is you want them right now. Because that means that by the time we get to next summer, not this summer, next summer, we can be recovering coming into the election. You can have hiring picking up. You can have people getting new jobs. Markets are going up instead of down. And that's the best scenario for the midterm elections. The worst scenario is that it blows up in August of next year in everyone's face. The market crashes, banks start failing, all the BS that happened in '08 starts happening again, and Trump loses 30 seats in the House, 6 or 7 seats in the Senate, and he gets impeached. And he gets absolutely nothing done from that day forward. And those are the options, because you're not going to be able to prevent this imbalance from coming back out of the system. You can't. And if you're going to have to take that hit, then the right thing to do is to use it to force production back into the United States and to sever this intertwining that is really parasitic and is draining the blood out of America, drain capital, human capital and investment capital out of America into the Far East and bring it back here into the US. And we can do that. That is what tariffs can do.
Will he be successful what he's attempting to do right now?
Not if he keeps trying to finesse it. No. No, it's going to blow up in his face. He'll push it out. He'll try to make it slower and more blunt. And that's a losing play, because that just compounds the damage. The longer it goes on, the worse it gets. That's the key thing. When you're in a hole, the more shovelfuls of dirt you throw out of the hole, deeper it gets. There's no winning strategy by allowing that to go on. You have to stop it.
So I try to explain to people, it's, there's no more easy roads anymore. There's no easy decisions, whatever they decide to do.
Yeah. Yeah. It's there is no way to avoid the suck from what was done in the years from 2008 forward, and especially during the COVID period of time. All right, the fiscal irresponsibility that was done during that period of time I don't think it's ever been done before in the history of, recorded history of economics. I don't think that kind of stupidity has ever even been attempted. And I mean, except maybe in Weimar Germany, we know how that turned out. The idea that we can just somehow skate past this, that's lunacy. It's never going to work.
What about the idea of, if Europe collapses, would all that money flow in the United States into treasuries? And
a crash will likely do precisely that. So yeah, I mean, see, this was one of the stupidities that occurred during the '08 timeframe, okay, and then forward, and then during Yellen's years in Treasury, but before that, Geithner and everybody else too. When we had that calamity, and then and again with Yellen during the COVID period of time, the long end of the Treasury curve got very cheap in terms of rates. All right. I mean, you've heard this stuff about the housing market. One of the problems is that there's a whole bunch of people that refinance and have 3% mortgages. Well, if you sell your house and you get another one, you can't keep the 3% mortgage. The new one's 6 or 7. Okay. Well, why didn't the Treasury during that period of time take all the short-term 1-year debt and roll it out to 10 or 30 years? All of it. Well, and the answer is the geniuses in the Treasury Department said, oh, well, that would be a 2% coupon. I'd have to pay 2% interest. I can get 0.75% if I stay in the short end. The 3/4 is better than 2. No, you idiots. 2 is unreasonably repressed. It's not going to stay there forever. And 2 years for 10 years is pretty damn good. You ought to take it while you can get it. But that's not what they did. So yeah, I mean, right now the short term, the short end of the curve is 4.25-ish, All right, four and a quarter, four and a half-ish. So if you get a crash like now, and the long end, the 30-year bond goes to two and a half, well, God love you. Why in the hell wouldn't you take everything you can and refinance it out into 30 years? Well, save a huge amount of money. And the reason is you think that the long end is not only going to come down, but the short end is going to be 1% again, which is lunacy. That's absolute lunacy. Anybody that actually believes that ought to be taken out in the middle of the National Mall and hanged right now. That was stupid when it was done before, and we're paying the price for it today. Anyone that thinks that you can get away with that kind of a game again, I don't care who they are, they have absolutely no business having any kind of control over any sort of policy, period, ever. That was dumb.
What happens to real estate in all this?
Well, the prices are going
Is it crushed?
yeah. Well, okay. So the basic rule that has always been true is that a median house in a market has to be approximately 3 times the median income in that market. That's the absolute upper limit on long-term affordability. Now, you look at the stuff that's going on around here, all right, where I live, um, you got, a middle-class family house is $400,000. Well, the median income around here is in 125, which still wouldn't cover it. 150 would, but there aren't that many jobs around here to pay 150. So is that a supportable price? No. Is 200 a supportable price? Yeah. And by the way, in 2018, the house was 200, and that was a supportable price.
Yeah, the inflated values of these homes. I mean, I have a friend in Phoenix. I don't know if he sold it yet, but it was I want to say 1,500 square feet, maybe a little bit smaller, probably built in the late 70s, Central Phoenix. I think it was listed at one point as 600 grand. Little yard, no garage, little like carport area attached to the property, but no garage.
Well, there's an awful lot of people that are caught with their pants down around here that bought into the craze with the cabin stuff. And that was just simply because during the COVID period of time, we were open and nobody else was. Well, supply and demand is the first law of economics, right? If there's a bunch of people that want a vacation and we're the only place where they can come, guess what happens to the rental price for that nice little cabin in the woods? Unfortunately, anybody that thought that that was a permanent change had rocks in their head, and an awful lot of people did, and an awful lot of people started building stuff. And then, of course, they got screwed by the increase in building costs because there was a period of time where Romex wire, for example, was more than double what it had cost before and what it costs now. Um, and so, those are sunk costs. Those are in the building. There's no way you get them back out. Uh, I, I don't see how that shakes out without people going broke. I just don't see any other way around that. So, but we'll see how that all plays out. But if you look at like what's for sale in the single family market around here, there's very little. Now this is a bad time for this area until we get into like May. Um, towards this month is when it should start. You start to get the listings, but you get into May, people start to actually put stuff up for sale and transact. It is very seasonal. In the wintertime, it's very rare to see a lot of stuff come on the market.
I can't believe they just continue to build apartments around me, all over the place.
Well, the thing that I think is so interesting is that like the D.R. Horton starts, the stuff that's listed, to be built I mean, it's still off the rack. Okay. And the problem isn't that people wouldn't like to buy houses. It's the kind of prices they think they're going to get. I, Again, you can't, I mean, these are median, these are ordinary working person style places. They are not palaces. All right. I mean, if you've got some kind of a huge spread, and you got a price for $2 million, well, if somebody's rich and has $2 million and wants to live in the mountains, and you might find the butt for that seat. But the idea that you're going to get people that are making 70 grand a year buying $400,000 and $500,000 spreads, and they're cookie cutter houses in a little subdivision, they can't. No way, no way. Those numbers just don't pencil out. So,
Well, even like the apartments that are going up by me and the rent that they're getting for that, I don't know who's paying for this stuff. And even, I was talking to a business owner who owns a restaurant here. I happened to run into her a couple days ago, and we were just talking about the whole industry of the restaurants. And I mean, these people, they've gotten just their teeth kicked in since COVID. But I don't know, half of those places are still open.
it's what I think. One of the things that is a serious issue in tourist heavy areas like this, and also where I used to live now near Destin, is that, and I don't know how much of it they're doing around here because I mean, the really touristy kind of areas, I try to stay away from them because there's really no reason for me to patronize those kinds of joints in the first place. But around Destin, what they did was they just couldn't, with what they were paying, nobody could afford to live there. Okay. And the way that the traffic and such was there, you're talking about an hour, hour and a half, one direction, especially at the wrong time of day to get to it, to get in and out. So they brought in a whole ton of J1 visa people. I went down there last year in a place that I used to hang out at all the time. That's a really, really nice place. And it used to be all full of local people that worked there. And the bar, the servers, everybody else, it's all foreigners, every last one of them. They're all legal, but okay, what did those people that live in the area that used to do those jobs, where are they working? What do you do when you hollow all of this out, when you do this kind of thing and you make it impossible? I don't see how this works out well for anyone. But that's where I mean, everyone says, oh, it's just, it's just this engineer or that. No, it's not. It's throughout the economy, and it has to be reversed. These costs have to come down. You cannot solve this by trying to lift wages. You can't solve it by passing $20 an hour minimum wage laws. All that does is put people out of business. The only way you solve this is to bring the costs down. That's it. That's the same thing in the medical system. You can't fix this with quote unquote insurance.
Yeah, and that's what one of my biggest concerns is when people's 401ks start to go down. If the markets, they go through it's going through a correction now, but more of a correction. People that they don't listen to you and I, Karl. So
it's
go off the reservation and even United Health as CEO. I mean, how much more of that kind of stuff could we start to see?
You know what? It always starts with the crazies. The problem is when it's not people who are crazy, you're not putting that back in the bottle. Once that genie comes out, he's not going back in until people get tired of seeing blood in the street. And that a few nut jobs do it. That's how it always starts. And it isn't, you get people to the point that they believe they have nothing to lose, and that's exactly what you're going to see start. It's what's going to happen. Because if I've got nothing to lose, and I'm pretty sure that you're going to kill me, they're all free. I can only die once. And it is entirely rational for somebody who is not crazy to say, you ain't getting me for nothing. My death is not free. You're going to pay for it. I don't like that, but that's, just because I don't like it doesn't mean it won't happen.
Could you see that potentially occurring?
Yeah, definitely. you take, the kind of people right now are hanging on based upon two things. Number one is that their 401k keeps going up, and everybody is out there trumpeting happy days are here. Well, guess what? The numbers on a screen are not money. Okay, it can disappear just as fast as it went up. It can go down. That's the first problem. The second thing is that you have people, especially folks that are in the middle age and older brackets, which of course are the least likely to do something violent simply because they're older and less able, right? But you're seeing them do things that I know a couple people that have done things that I don't understand how they could possibly have rationalized this. And I'll give you an example. You got somebody that has $100,000 a year income, but they got a $2 million portfolio. And the reason it's $2 million is it used to be 500 grand, and most of it was in Apple and Nvidia and a couple of other, the Magnificent Seven, so to speak. And it's quadrupled in the last 4 years. Like they've seen 300-400% gains in these names. And that's where all of their stuff was. Now, these are people that are into their 40s and 50s. They have absolutely no business having that kind of exposure to the market in general, but they do. Now, the problem is this. They think they got $2 million. So they took their $300,000 house and they rolled it into a $750,000 mansion because they're rich. So now, and by the way, they took out a 30-year mortgage and they're 50 years old. Now, what happens, I wrote an article about this a couple of weeks ago, and I pointed out what happens in this situation. You get to this point and you look at the numbers and you say, if I take 150 grand a year out of this portfolio, assuming that I'm going to make 15% a year, which, I've been doing that or better for the last 5, all right? I'm never going to run out of money. In fact, my balance will keep going up. Problem is, you have a crash, that portfolio gets cut in half. You all of a sudden now can't take 150 out, you have to take 70 out now and forevermore, because if you lose 50%, you need to double to get it all back. And if you take money out when the value is depressed, it damages you twice because the compounding runs in reverse. Unfortunately for this person, they have taken on a $4,000 a month mortgage obligation. Okay. And so now that mortgage is more than half of their cash flow out of that portfolio. More than 50%. And they haven't paid the insurance and the property taxes yet. You're dead if that happens. Financially, you're done. You go from entirely comfortable to bust within the space of 5 years.
People are going to lose their shit to all this, Karl.
Yeah, it's, to some extent, I'd like a nice 3/4 ton truck. I'm not paying $75,000 or $80,000 for it, but I'll buy yours for 25 when you have to puke it up.
Well, that's the thing too. It's I'm going to be in the market for a car here by the end of the year, and my thought is the longer I wait, I think there's going to be some real deals.
Well, the other thing that I think is going to happen, and interestingly enough, I think Ford may be the one that does it. I didn't think it would be Ford, but it looks like the rumblings I'm hearing is that Ford is probably the best position to bring the manufacturing of components back into the U.S. of the three. Okay, now, Stellantis pretty much only makes trucks these days, but Ford is arguably in the best position to do that. Although interestingly enough, Hyundai has a huge percentage of their productions actually in the United States, including components, not just assembly. So, and Honda has a decent crack at being able to, do the same sort of thing, basically build everything here. Now they've got a lot of imported content, but surprisingly enough, Japanese guys, right, and the Koreans are the ones who kind of, have the flexibility to position this. Within the American manufacturers, it's Ford, though. And my suspicion is that with the endangerment finding, which is the one that drove all the CO2 stuff and all the crazy emission standards, that's going away. The Trump administration is doing this the right way. It comes on the back of the Chevron deference decision out of the Supreme Court. They're doing it through the official rulemaking process. That's going to be almost impossible for a future administration to reverse, which is the good news, because if you want somebody to make a $20 billion investment in a factory that's got to run for the next 20 years, you can't have that get turned into smoke 2 years from now when the government turns over. Right? You just can't. Nobody's going to do that if they think that might happen. So that they're reasonably well protected from that is a good thing. And I think you could very easily see a lot of the complexity and therefore the cost on the emission side come out of those vehicles, which means now instead of that base 2500 series truck being 55,000, it's 40 or maybe 35. And I mean, now that's a work truck, okay? Vinyl seats, nothing, no fancy shit. But I think you could very easily see that happen in the new market. Now, of course, that destroys the used market for all the people that are over levered. They get ruined by this because why would anybody buy your one that's 3 times as expensive to work on and have fixed when I can buy the new one for less money? Okay, that'd be dumb. But from the standpoint of the automakers that are in a position to take advantage of this, is fantastic. So.
But also in the used market, with the used market, that means that people that they're going to need to unload these cars. That's going to make them even cheaper.
Well, yeah, and especially for the heavier duty stuff, the diesel trucks in particular, if they take some of the current compliance costs out of the new vehicles, and this is an if, okay, and I don't know that this will happen, but if it does, it will essentially make all of those ones that are on the road today with the urea injection and the DPFs and all that, it'll make them unmarketable. They won't be worth anything. People won't buy them. Used, you won't be able to get rid of them for $1.
Well, also I think as inflation keeps going on, people are getting squeezed, and everybody everything out there is a grift today,
Yeah.
Right? And raising insurance rates and price of food. I mean, I haven't seen it go down. I know Trump's been touting the fact that things are. I don't know. I don't see it. Do you?
You
go out to eat though. Not to interrupt you, but you go frequent restaurants. I mean, I never go out to eat
No,
anymore.
no, I don't.
Oh, you don't anymore?
Unless I'm traveling.
Oh,
I'm traveling. I do, of course. But if I'm not, no. I've got a smoker on my back deck. I vastly prefer to throw some hunk of meat in that thing than go out.
Yeah, I got to come by and see you this summer when you're smoking a bunch of meat.
Well, speaking of which, one of the things around here is standing rib roasts that usually are on sale like 3 times, 3 sometimes 4, usually right around the holidays. And Kroger, stuck them up. They're this week's thing. Okay. Well, they're $2 more a pound than they were a year ago. Inflation's down. Prices are down. I don't think so. I mean, it's still for what amounts to ribeye steak, writ large in big hunks. It's a better price than buying them onesies. So I will still probably buy some, but they're not cheaper than they were a year ago. They aren't cheaper than they were for Christmas either. I bought one at Christmas. And, have eggs come down a little bit? Yeah, a little. But they were $1 a dozen a couple of years ago. So spare me the BS about how that's coming back down.
And gas, in my area, I haven't seen much of a drop in that either.
Gas has been pretty constant since the crazy spike during the Biden insanity with all the green stuff, which to a large part has gone away. The push to essentially get rid of, what Biden was trying to do was essentially ban gas cars, essentially force everyone into electrics. And that is gone. The Chevron deference decision out of the Supreme Court to a large degree killed that. And so, but yeah, I mean, fuel is still over $3 a gallon here. It hasn't moved materially.
Yeah, and I feel like people are, are they? I mean, maybe I'm wrong, but barely hanging on with all this. And again, coming back to small businesses, I don't know how some of them, I don't know how they survive. I don't know how restaurants are doing it.
All right, well,
There's only so much
one
money to
th
go around.
yeah, one thing to be aware of that I'm seeing, and this is anecdotal so far, but I'm seeing it, and I saw this in the '07 timeframe, and it was a warning. Um, a lot of people are see that have very stable credit profiles. They don't change their utilization. They use the same amount on their credit cards every month. They pay them off every month. They have no other debt. Very, their income is stable. They didn't just get fired or anything like that. They're seeing all of a sudden 20 and 30 points come off their FICO for no discernible reason. And a couple of people are reporting something that I saw last time around in the back half of '07, which was a screaming warning sign to me that the banks know that a catastrophe is impending. And that is they're having their lines slammed down to their open balance. So let's say that you have an Amex card that has a $20,000 line on it, which, by the way, Amex is known for doing with some regularity. So are a few other issuers. But of course, you have to have a long history with them that you pay them in order for them to do that, right? Uh, I mean, I used to charge trade shows on my Platinum card when I ran my internet company. So I mean, they were used to be running huge balances. But of course, I got paid off every month because it was corporate stuff. And all of a sudden, out of the middle of nowhere, your balance at the end of the month is $4,000, and they slam your line down to 4 grand. That's it. And the problem with the bank doing that, if they do that, is it cranks your utilization percentage way up. So your utilization goes from, say, 20% to 45 or 50 of your total outstanding available credit, which hits your credit score by about 50 points immediately. Now, if you don't need credit, you'd say, well, I don't care, except that's not true because that score goes into your renewal premiums for your insurance. So all of a sudden, your homeowners and your auto insurance go up $100 a month each. Okay, now this has happened before. This happened the last time around in a few months before the catastrophe, and I'm not seeing it widespread yet. Okay, if it starts to show up on a widespread basis, then it is a screaming warning sign. But there are some reports that I'm getting from people that I know and that monitor this kind of stuff closely to say that it is starting. And there are people that are getting hit that did not have a triggering event. I mean, if you get laid off or something like that, then they find out about it. Yeah, okay, that explains it. But we're not talking about situations where that's happened or where someone's changed a buying pattern or something like this.
So you're saying their line of credit, credit card, whether it be personal or business, their limit was 20 grand and they average monthly charges of about 5, and now they're just restricting their line, capping it at 5,000.
Yeah, well, what happens is yeah, you get the statement and the line's been dropped to 5. And the problem is a big part of your score is the percentage of available credit that you're using. That's a significant part of your credit score. So as soon as they do that, it hits your score.
What's the state of Europe right now in your view?
Well, I think they've got bigger problems. I also think China has bigger problems than we do, frankly. Um, Europe has dug themselves an enormous fiscal hole with this whole Ukraine thing and their energy dependence upon Russia. That oh, well, that's terrible. We have to turn it off. Okay, so they've had a couple of countries that disconnected from the Russian electrical grid because politics, right? We don't like those Russians. They're evil bastards. Oh, that's nice. And the cost of power doubles. Um, what's that do to the rest of your economy? Because every single company that makes anything has to pay for the light bill. All right. I mean, I think Europe is in a huge amount of trouble here. And in fact, there was just a rate reduction. I don't remember who did it, but I saw something come across the wire this morning that one of the European nations actually dropped rates. And their argument for it was the tariffs. And I'm like, guys, I got news for you. That's backwards. If you've got a tariff problem because you're running a trade imbalance and you drop rates to try to force liquidity into there, all that's going to do is cause the people on the other side, in this case us, to hike the rates higher, the tariffs. We're going to increase tariffs if you do that, because part of the computation of how do you come up with a tariff rate has to do with currency manipulation. Okay. I mean, you want to talk about a death spiral for a country. That's the stupidest thing in the world to do. But this is the misunderstanding that people have about tariffs, in that the country that is running a trade deficit doesn't lose a trade war. You can't. Yeah, it's painful. Yeah, it's disruptive to your economy, but you don't lose. You win. The guy on the other side gets destroyed because he doesn't have anywhere to sell stuff.
You see Europe breaking up from all this?
Brexit,
I feel like that's been on the precipice. I mean, but they never do.
Well, the European Union is a flawed construct. It's a currency and trade union without a political union. The whole situation with the pigs years ago was caused by that. The fact that you have all these nations that have different economic profiles, different labor profiles, different skill sets, different immigration policies in some cases. Of course, they tried to equalize that by throwing the borders open to every single African that wanted to come into there, which was really stupid because most of those people are very low skill and therefore high cost. And you don't get much economically back out in the form of taxes to offset that. But you have these countries with very different fiscal profiles, all operating without tariffs and without any kind of border control for goods, services, and people. That generates a huge disconnect between the winners and the losers. You're going to have that kind of a union. It has to be a political union as well. But of course, go ahead and try to talk to the French and tell them that, oh, by the way, now Spain gets to make decisions about your political process and see how well that works out. The French might actually figure out that, they're not just going to buy rifles and drop them once. Maybe they'll actually use them to shoot a few times first. So, I mean, I don't think that entire experiment was well founded, to put it mildly. And the premise of the European Union, from my point of view, was flawed at the outset. I'm surprised it's lasted as long as it has. But to a large degree, that came from the same school of thought economically as Friedman, that if we had free trade with Mexico and Canada, for example, that what would end up happening is that wages and living conditions would equalize between all three countries. So, the UAW guy that was screwing together cars in Detroit was making $40 an hour. The guy in Mexico was making $5, and everybody'd make 30. But in addition to everyone making 30, you double the size of the market, because now everybody in Mexico can afford to buy the car, right? Because he's got 30. Well, that's not what happened. Okay. And the European Union thing was founded from essentially the same cloth, and it turned out to be just as much bullshit as it was with NAFTA. So, where the Friedman types get it wrong is that America really is fairly unique in terms of our political structure. And the way I like to say it is that whenever you have a revolution, for every George Washington, you get 10 Hitlers. And that's just kind of how it works out. So, I mean, the idea that somehow Mexicans were going to end up with American standards of living because GM put a plant down there was fantasy level bullshit. What you instead ended up with was even more money for the drug cartels and everybody else to grift off and distribute around to their friends. And now you've got 50 caliber machine guns instead of machetes. That didn't work out so well for the average person in Mexico. It didn't work out so well for all the jobs that left America either.
What do you say to people that, what can I do? What can I do? What can I do? For regular people that don't have an understanding, haven't been in tune to this as long as you have, um, I ask myself that question, and and ask others too. It's like, what can what do you suggest?
Well, for one thing, live below your means. Don't be in debt. Don't be levered. These kinds of economic dislocations can be tremendous opportunities. I mean, it's one of the things I learned fairly early on as an entrepreneur, which is you don't make money selling things. You make money buying them. And a large part of my success, and the reason I had the kind of operating margins I did in my company, was that we were able to capitalize on that kind of thing. We had no debt. We had cash. We needed more office space at one point. Another company downtown in Class A office space that had access to infrastructure we didn't have where we were, but infrastructure that I needed, blew up and left 8,300 square feet of office space into Prudential Plaza, which we were able to get for about a fifth of the going rate if I'd just gone out and shopped it among different buildings down there that had that equivalent infrastructure level access. Well, we got a 5-year lease at that price. I mean, that's holy shit. I mean, that drops directly to the bottom line because it's a check I don't have to write every month. It's a much smaller check for the rent that I would otherwise have to stroke. And so, that goes straight to the bottom line. That's not the only time I did something like that, but you have to. Thing is, those opportunities don't sit around. You have to, they come up, they show up, you take advantage of them or you don't. If you're not in a position to do something with it right then, right now when it happens, somebody else does, and you lose. And that's, there's nothing wrong with feasting on other people's stupidity as long as you didn't cause it. So that's kind of that's the primary advice. The problem is for people that have gotten in way over their skis, the 45-year-old that, was looking at a $2 million portfolio and took his $200,000 house and bought a $700,000 house because he's rich. You're boned. At this point, it's too late. All you can do is pray. And, given that we're coming up on Holy Week, about at the end, maybe go see a priest because
maybe while you're there, bring it up.
Yeah, I mean, you might add a little invocation that you don't end up in the bottom of a hole, financial hole somewhere you can't dig out of. But for the people who haven't done those kinds of silly things, the last thing you want to do at a time of instability like this is try to chase leverage and try to chase excess returns. That's stupid. That's just, one of the things about being a trader, and I don't care what you're transacting, whether it's stocks, bonds, whatever line of business. You wake up every morning and you look at what you have and you say, would I buy this today at this price? And if the answer is no, then you dump it. And if the answer is yes, that you would be in this line of business, market conditions as they exist today, then that's what you do. And if there's another line of business that you would enter in the current day's market conditions, then you enter it. But if you're in a market and you say, this looks kind of dicey, I think this sort of sucks, the return on investment isn't there, then you dump it. You get out of it. And you can't get married to anything like that. You just can't. You'll end up riding the scree all the way down into the hole. That's crazy.
Are you keeping an eye on something that if it presents itself and it makes financial sense, you're gonna jump on it?
Oh, there's all sorts of things that I think would be really interesting.
Any secrets? Any Coffee and Mike exclusive, Karl?
Well, I think there is, like I said, I think there's a tremendous opportunity, not at these prices, but where they're likely to go for firms that can relocate production and opportunity in the United States. And there are a decent number of them in the industrial area. And you have to be very careful that, I mean, and like I said, I wouldn't buy any of them today because that price adjustment hasn't happened yet. But I do believe there's a great deal of opportunity that's going to present itself over the next, 6 to 12 months. It's just not now. I wouldn't, I mean, right now, I've got a handful of speculative, they're moonshots. They're companies that have something in development that I think is, if it works out, it'll make their stock price go up by a factor of 50. If it doesn't work out, it'll be a zero. They're lottery tickets. They're very small amounts of money. Will I cry if they go to zero? No, but will I laugh if, one or more of them hit? Yeah. But I mean, would I be in any of the mainline names, any of the big cap companies today? No, absolutely none of them. But on the other hand, I don't want to be short any of them either because I don't know short term what's going to happen. And the right trade in the summer of '08 was to be short all the banks. And then out of the middle, and it was obvious why. They were all losing money. Okay. I mean, on straight analysis, they were all bankrupt. Huge number. I mean, didn't matter. It's pretty much dartboard kind of thing. Like I said, I think JP Morgan, without intervention, was the only one that probably would have survived. Maybe Goldman. But then out of the middle of nowhere, there's an announcement they banned short selling. And if you're short those names, you got it up your chute. All right. So, do I want to be on that kind of a trade, knowing that the government will break the rules, that they will do this kind of thing for the specific purpose of burning you if you try to do something that on an analysis basis makes sense? No, I'm not playing that game. I'll wait for the opportunity when it comes, and I believe it will.
Last question. So much for only having an hour conversation today, Karl, right?
Funny how that always works.
I know.
I don't think there's been one of these that has actually ended up where we thought it was going to.
No. Well, we started talking about this. I don't think we grabbed it on audio or recording last time. We started talking about it offline afterwards, and I think I said to you, we got to talk about this next time. And I was thinking, I'm like, well, I'll save it for the next conversation, but I want to bring it up to you.
Yeah, sure.
You got time?
Yeah, of course.
We were talking about college and young people. I think we were talking about that offline. I don't think we grabbed that on recording. But I thought it was really interesting what your thoughts were on academia today. And I think maybe I told you about my friend Matt Smith, who's writing a book with Doug Casey and his son called The Preparation. Did I tell you about that at all? Maybe I did. Maybe I didn't.
Maybe a little bit. I don't think so very much, though.
It's coming out in a few months, I think. But his son decided not to go to college. He already went to EMT school. From there, he had an opportunity to fight wildfires up in Oregon. He learned how to parasail. He's been learning how to ranch, be a farmer, harvesting cows. He's going to get his private pilot's license. He's going to go back and fight wildfires. And I've met a few young people. I met a guy the other day in his 20s. He just dropped out of college. He was like, pardon my language, he was like, fuck it. He's like, I was wasting my time.
Well, you're wasting your money besides your time. The thing you have to realize that a lot of people don't get this, but they really, every young person should. I'm 61. Okay. Every day I wake up and I'm on the right side of the grass is a good day. Okay. You can never get a single minute of your day back, ever. It doesn't matter how rich you get. It's true for all of us. It doesn't matter how old you are. Whatever you spend your time on today is gone. If you go to school, then you are trading time that you cannot recover for future prospective advantage. That's what you're doing. The problem with this is, in an environment where the government and industry are conspiring to take as much of that skill and throw it overseas for $5 less an hour, you're betting against the people that are trying to destroy you. And they're the ones with the levers of power. And both young and old people have refused for the last 3 decades to throw all of those SOBs out of office, tie cement bricks to their feet, and throw them in the Potomac. So, and the thing is this, at the end of the day, in a representative republic, the people have the power. We have all the power. All right. It's not, and it doesn't require violence. Yeah, it ends up there if they try to use it first, but it doesn't require violence. It just requires saying F you, but people won't do it. Okay. How many people go out and buy $1,000 iPhone and pay zero attention to the fact that the entire reason that they can buy that iPhone and Apple has the market cap that they have is because they've got essentially slaves screwing the thing together, all the way down to the guys that are making the box that it came in, that are working 7-day, 12-hour shifts for essentially zero money over in China. Now, could your kid be working on that factory line that makes those boxes in America? Of course. Well, why isn't he? Well, because the guy over there works 12-hour shifts, 7 days a week, and he makes $3 an hour. And over here, you couldn't get away with that. That's why. I mean, let's face it, we have trees, right? Which means we can make paper, which means we can make cardboard, we can make boxes. I mean, American industry is hell-bent and determined to take the skills that you acquire in college and ruin you. And the government has been their handmaiden for the last 3-4 decades in doing it.
And they want to rack up so much debt on you.
Yeah.
That puts you in such a hole that you get out, and then you're a forever slave.
Well, yeah, exactly. By the way, you know what mortgage means, right? Where it comes from, the etymology of it?
No, please.
Death note.
Really?
Yes, really. Look it up. Mort. What is mort? Mort is death.
Death pledge. As soon as I write in the word mortgage meaning, first thing is death pledge.
Yeah, that's what it is. That's what it means.
And yet, I have friends that are, some of them have their kids in college, and they say, well, when we were there, it was the college experience. The kids should have a college experience. And this is what this 20-year-old said to me last week. He goes, yeah, somebody said that to me too. I don't even know what that means. What does that mean?
Well, I'll tell you what it meant when I quit after a couple of years, and for pretty good reasons. I detected what was going on, and by the way, this was not, 10 years ago either. Gray hair, right? All right.
This would have been what, early 80s? You're in college?
Yeah, it would have. And but the problem, the difference between then and now, is that when I did that, I had paid cash up until that point. So what I lost was money that I had already accumulated and then spent. Okay, that was my loss. Now, was it completely a loss? No, because I got some skills that ended up being useful. I didn't have a degree, but did I learn something? Yes, I learned something. Was it worth it? No, on a forward basis, it wasn't, which is why I left. Okay, but I could make that decision because it was sunk cost only. I wasn't in debt at the time. You used to be able to work spinning pizzas or flipping burgers and make enough to go to school. Pay for the whole thing. Wasn't that hard. Okay, an awful lot of people waited tables and that's how they paid for school. Well, you can't do that anymore. And to a large degree, the reason that's happened is because we have allowed financing to be decoupled from risk. And Obama's move was the last in a long series of these, but it was not entirely him that did it. He was just the last one that did it when he federalized all the student loans. It started with, actually the GOP began it, because a handful of medical students strategically defaulted. And it wasn't very many of them either. I think the total number of people that did it originally was like 20 or 30 or something like that. They went through med school and then they put up the middle finger and declared bankruptcy. And the federal government started putting restrictions on being able to discharge student loan debt in bankruptcy. Well, then Obama federalized everything, but this was the culmination of a long process. And when you take risk out of giving people credit, then the college says, well, okay, the tuition is now $10,000 a semester instead of three. Why? Well, because because the government will let you take on a loan. And if you don't pay, you can't get rid of it in bankruptcy. So therefore, they'll come after you all the way through, up to and including garnishing your Social Security when you're an oldster. All right, there's no way to get rid of it. And therefore, we can do this kind of shit. And so we're going to do the same thing the pharmaceutical industry does with new drugs. Well, the actuarial value of a human life is $2 million. And so if you're halfway through it, it's $1 million. And if this drug keeps you from dying and you would have otherwise died, well, we can charge you 750 grand because that's less than $1 million. The colleges started running this sort of shit. And those numbers, they don't work anymore for most professions. And if you had a reason to believe that the profession would stay in the United States and you'd have good employment prospects, there are some that it would. But unfortunately, that is, for the most case, no longer true. And between industry and educational institutions, they don't give a wet crap about this. You know, one of the biggest scams that's going on now is the F1s, which are foreigners that come here on student visas. They're non-resident visas. A lot of them end up getting converted to H-1Bs. The reason the colleges like them is they come in here and they pay full price. So part of what's driving that price up and therefore driving up your student loan requirement is the fact that you got a bunch of Chinese people here in the country that are paying 20 grand a year. And why would they give you a seat for 10 if they get 20 from that guy? So you have our educational institutions that are together with our corporate people and our government that are all screwing young people and then exporting the jobs. So not only do they screw you on the front end, the job's not there when you get out.
And then on the specialized professions, they drag out the criteria to just rack up even more debt. I have to believe, I mean, I didn't go to medical school, obviously, but you know, the amount that you are in the hole you are and the length of it all, I have to believe that could be shortened.
Well, it is designed. I mean, you want to know why it costs so much to have a crown done in your tooth. It's because the dentist is 350 grand in the hole before he gets out of dental school.
And we have a healthcare system today, going to healthcare, that is collapsing.
Well, it's going to collapse. And I've been saying this now, oh God, it's been 15 years. I've said the only defense you have is don't need it. Because we can't get either side of the aisle to actually do anything about this. And Trump said he was going to in his first term. And this is one of the things that when he was reelected, I put out there, I said, I do not believe he's going to take this thing on, but he has to, because into a collapsing economic environment, if you try to level the playing field on the trade imbalances and everything else, you have to get the cost out of the medical system. If you don't, then none of the rest matters. If you do, you end up firing 80% of the people that work in the medical fields today, none of whom are doctors and nurses. They're all bill collectors and paper pushers. But now those people need jobs. Okay? Well, if you bring the labor for industry back into the US, hey, there's a bunch of jobs available. Okay, this is how you work the recovery. But it doesn't happen in a week. And this is why you can't sit here and try to finesse this thing. You have to tear the Band-Aid off, let the collapse come, and at the same time, force the canning of all those people in the medical field that are not actually providing care.
You know who I feel for in all this? I feel for people my age because we knew a different world. we knew a world where we played outside. We knew a world without social media and iPhones and what
Yeah.
have you. But the younger
Hey,
people,
I drank out of a garden hose,
yeah,
Michael.
me
So
too, me too,
I,
me too. Ran through a sprinkler system.
yeah, we
Uh,
didn't have an air conditioner. The air conditioner was the sprinkler in the backyard.
oh, but the younger people, they don't know any differently, and they don't want to work these corporate jobs.
I, you know,
I don't
having
blame
a
them though,
purpose.
Carl. Not to cut you off. I
No,
don't blame them.
I don't either, Michael. But here's the thing: having a purpose in life is important. Okay, sitting around playing Steam video games all day isn't that okay? Um, there is a this may sound like one of those retro nostalgic kinds of things. I do all the work on all of both my vehicles and on my daughter's vehicles. Okay. It's not that I can't afford to pay somebody to do it. It's that I actually enjoy doing something like changing a wheel hub or doing a brake job or even working on the engine. I enjoy it. I enjoy the challenge. I enjoy, okay, this was broken, now it's fixed. If people say, well, laying bricks is really laying bricks is a terrible thing. You ever look at Notre Dame? What the hell do you think the guys that built that thing thought? Most of them that were working on it originally, they were dead before it was finished. These people were building things that they were never going to see. But it was the accomplishment just of doing it. There's something very human about that needs to be part of the human experience.
Where can people find you, Carl?
Market-ticker.org. And if you're on an Apple device, you will see a slightly different presentation.
As always, I enjoy these conversations. I know it won't be that long before we talk again, and we'll see where this goes.
Yeah, we will.
Mic drop.